Hey there everybody, it's another edition of Where in Greater DC. My name is Brian Gormley. We do a weekly video blog all over the Greater DC metro region, filming in different locations each week and giving away a free prize to the first person who correctly guesses our filming location and sends that guest to support@cornerstonepropertiesHomeInfo.com. So this is a little bit of a new area for us, uncharted a little. So happy guessing. We'll do a little, there's not really much to see on the other side of the road over there. So we might not do a 360 like we normally do, but feel free to send those guesses in and check out our site, capitalshortsale.com, for more free giveaways and so on and so forth. We're actually starting a free homeowner and agent workshop for short sales. So you can sign up and get a free lunch at a variety of different locations. So go to the site and check it out, and hope to see you there at one of our workshops in the next short-term future. So anyway, our topic for today is it a good time to buy a house? If you're a buyer, if you're a seller, it's a good time to put your house up on the market. And an interesting sort of corollary to this is the trend in the market right now, and whether or not it may even be a seller's market, if you can believe that. So what we've certainly been finding is that because of the restricted inventory in the market, particularly on the investor side, that the prices are being driven up. Foreclosures have dried up quite a bit. Investors are looking for properties, and of course, in order to make money, they need to buy. And so they're actually overbidding on prices of houses just because there's nothing out there, and they've got to try to make some money some way, somehow. So for investor properties, particularly in the district, it's a great time if you're a seller to put your house on the market and and try to snag that buyer, especially if it needs some work. You might even get a retail buyer who otherwise wouldn't be interested in your property because of its condition, but who's looking to put a little bit of sweat equity into it, and get a 2 or 3K loan or fund some rehab themselves or whatever, and get a really good price. Certainly on the selling side, we've gotten multiple offers, and anecdotal evidence suggests the same, that other agents, both on the buying and selling side, have to compete with multiple offer sort of situations with properties that would otherwise tailor more to an investor. If you're a retail buyer, it's still a great time to buy. Prices are about the lowest they can get. And there's a general sense, right, in the data, the amount of listings, how long it's going to take to clear out the existing inventory, as well as the prices, that we've hit our trough, right? With the prices, the market has stabilized. Certainly, you're getting that from a lot of different sources in the media as well. And so it's backed up by some numbers. So over the last few months, you've seen year-over-year price appreciation. So the thought is, okay, if you've got the trough now, you might even be on a slight uptick, and interest rates are not going to get any better than they are right now, right? Get this, I've seen ARM loans offered for 2.25% intro rate, 2.25%. Now I have to say a little tangent on this ARM interest rate. I can't believe that banks are still peddling this, where they have this teaser rate that increases in 5 years, whatever, if it's a 5-1 ARM. And so on. That's part of the problem that got us into the big housing mess in the first place. The loans that people really are deceived by. They think they can afford a particular house based on an interest rate and a mortgage payment, and they don't realize that their mortgage payment is going to go up in 5 years. There's no other place for interest rates to go. They're not going to go down at this point, right? And it's going to be very difficult to refinance at those teaser rates. And in 5 years, you would expect rates to be significantly higher than they are today. So unless you've knocked off quite a bit of principal and or have a heavy down payment, so you've got built-in equity, it's not even built in, it's just equity at that point, then you're setting yourself up for a very difficult situation. Very difficult if you're a buyer. So watch out for those ARM loans. I'm surprised that they're still out there. They really never went away. But I saw one that was at 2.25 with a cap of 7.5%. get that. So, you know, I'd probably eschew those and take the fixed rate, 3.5–4% right now for 30 years. It's just the government giving away money. You can't possibly imagine that interest rates are going to be that low for very long. So it's a great time to buy if you're a buyer, great time to sell if you're a seller. It might even be a seller's market in some cases. And that's a pretty cool dynamic. We're at a weird transition, sort of inflection point in the market, it seems, where it's a really good time because the supply seems to have dwindled. Many people who can sell, or excuse me, can afford to wait are waiting because they don't want the price depreciation you know, to have settled into their purchase price. They're going to wait for a little bit longer for prices to really rebound. You know, buyers who want to buy because they've got to move, or sellers who have to sell because they've got to relocate, or they lost their job or whatever. You know, it's an interesting sort of combination of factors that really will help those people who are in the marketplace for one reason or another. So that's my 2 cents. Don't forget, we do negotiate for free short sales for both agents and homeowners. So check us out, capitalshortsale.com, and don't forget to email those guesses. support@cornerstoneproperties, homeinfo.com, and you can send in questions as well. Feel free. We'll be happy to you know, start a dialogue here with any discussion topics you want to propose or questions you may have. So that's it for me this week. Thanks for listening, and I'll check you out next time. Bye-bye.